What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So, I enjoyed myself over the weekend. I had to work and I was out last night, so I had some fun with some friends. It was a good going away party for a friend. He's moving to Nashville. But it's time to get back to business, and I have 5 dividend stocks to buy that are under $40. I'll do a dividend stock analysis. These are high-yield dividend stocks. I found a new monthly dividend stock. Very interesting that these guys in the board of directors decided to make them a monthly dividend stock. They're not a real estate investment trust, which is kind of crazy. And of course, you're always going to get a bonus stock. There's one that's increasing its dividend over time. Its revenue is pretty nice, so you got to check this one out. So let's check this out right now. So that first stock is Medical Properties Trust. It's sitting at $21.65, a dividend yield of 5.17%, a PE ratio of 23.41. So its year range was $16.10 to $22.82. It is sitting at $21.65. So it is not too expensive. It was actually in line with the S&P for the past 5 years, and then it took a huge nosedive. But this is a specialized real estate investment trust. I own this one, and I'm long in it, and I'm going to show you why. This is, of course, a specialized real estate investment trust in the medical field. It has 446 properties, 47,000 licensed beds, 9 countries, and 51 tenant relationships. So that's a well established real estate investment trust, and its dividend is very attractive. So here's just them on the map. I'll show you their portfolio real quick. They're pretty transparent in what they are pretty much a landlord with. So they have general acute care hospitals, behavioral health facilities, inpatient rehabilitation hospitals, long-term acute care hospitals, and freestanding urgent care facilities, and 4.5% other. So these are all things in demand in the healthcare. General acute care, behavioral health. Unfortunately, as I said before, mental health is off the chain, and there's a high demand for behavioral health. And I don't want to get into details, but it's very challenging with behavioral health, and it's only going to get worse. This pandemic made things worse. People didn't go to see their psychologist or psychiatrist because of the pandemic. Facilities were very hesitant in having people come in the facility. What happens if they test positive for COVID? Well, then they have to go to another place, or they have to be quarantined, and these are causing more issues. So the inpatient rehabilitation hospitals are very important. The long-term acute care hospitals are also important because think about this. People are getting sicker. There is an epidemic with obesity, hypertension. They're saying in diabetes in 2050, this is just an estimate, that 1 in 3 is going to be obese and 1 in 3 is going to have type 2 diabetes. And guess what? When you have diabetes, you get blind. You can lose kidneys. You can get amputations. You're a candy store. The bacteria like the candy. So if your sugar is always high and consistently high, you're more prone to infections. And those bacteria eat it up. I mean, think of gangrene, amputations. That stuff's nasty. I can tell you, being a nurse, going in a room, smelling a patient that has an infected foot, it has a distinct smell. And unfortunately, with diabetes getting on the rise, these guys are going to be in demand. Absolutely very strong dividend stock. I'll show you their dividend history. Look at this. So we're getting consistent dividend increases. It's like getting a cent raise at work. 21 cents, 22 cents, 23, 24, 25, 26, 27, 28 cents, 5.17% dividend yield. How can you say no to that? PE ratio is a little iffy, 23.53. But guess what? These guys, beds are getting filled. People are paying rent. These guys are getting money. So that's one thing that I see about these guys, and that's why I own these guys and I'm long in them. Let's check out the next dividend stock. Who? Pizza Royalty Corp. Very interesting stock. These guys actually are a monthly dividend stock, last I checked. And I actually had to search PZRIF on E-Trade because I have an E-Trade dividend portfolio. Unfortunately, it's not on M1 Finance, but you got to check these guys out. The year range is 615, and it was 924. Volume 1.21K, but the market cap 277.70 million in Canadian dollars. But I found it on E-Trade. I think I can buy some on E-Trade, and I'm highly considering buying this dividend stock because it's a monthly dividend, and I like monthly dividends. So let's check these guys out as a company. So these guys have made pizza since 1967. They've grown to more than 750 restaurants from coast to coast, being a trusted brand and leader in the food service industry. We're proud of quality food we make and the difference we make in communities across Canada. We've made a lot of pies and memories over the years. Find out what goes into both. So here's a few things that I want to show you about these guys that make them interesting. So their sales and revenue aren't too bad. This is again in 35, 31. Of course, you can argue about the pandemic, but these guys are getting big. They're expanding, and I'm very excited for these guys as a company. And I can't believe that these guys are a monthly dividend stock. I like the way things are looking. And there's a little bit of a positive in sales and growth. I know the pandemic things went bad, but let me show you their dividend history. At one point, they took a nosedive, 0.07 cents to 0.5, and then it's slowly increasing, and it's 6 cents. So it's slowly going back up. This is a cheap dividend stock, and has a pretty good yield. So I'll show you the yield real quick. Here's some interesting stuff. I just want to show you the annualized dividend is 63 cents. The dividend yield is right around 5.55%. Payout ratio is 87.05. So just keep an eye on that. So, but it is a 1% increase. So that is very attractive. And I found it, I thought I can get it on E-Trade. So if you have Fidelity, you may be able to get this, and but I couldn't get it on M1 Finance, unfortunately, but I could get it on E-Trade. So it's very attractive, and I like the slow dividend increases. So that's very interesting that they distribute a monthly dividend. Let's check out the next dividend stock. And this one's just squeaking below $40. First Energy is sitting at $39.59. Took a huge nosedive at one point. So the year range is 26.17 to 39.94. Dividend yields 3.94%. PE ratio is 19.76. I have to deal with these guys as a company. I'm not a fan of them, but their dividends have increased. They're a huge company. I'm going to show you information about them. They got in trouble with corruption issues, with bribery with Larry Householder, a state representative. But these guys are such a juggernaut in the state of Ohio. I need to show you their map and what they're about. So they're a forward-thinking electric utility company centered on integrity. I don't know about that. Powered by a diverse team of employees committed to making customers' lives brighter and the environment better and our community stronger. So, look at this. They're dedicated to integrity, safety, and reliability of operational excellence. Headquartered in Akron, Ohio. Right around there, 330. First Energy includes one of the nation's largest investor-owned electric systems, approximately 2,400 miles of transmission lines that connect the Midwest to Mid-Atlantic regions, and regulated generating fleet with a total capacity of more than 3,500 megawatts. So they have 10 regulated distribution companies and one of the nation's largest investor-owned electric systems, based on serving 6 million customers in the Midwest, Mid-Atlantic regions, stretching from Ohio-Indiana border to the New Jersey shore. The companies operate a vast infrastructure, more than 269,000 miles of distribution lines, and dedicated to providing customers with safe, reliable, and responsive service. Man, they dominate the whole state of the whole state of Pennsylvania. And Ohio, I'm right over here in Northeast Ohio. I'm held at the will of these guys. Look at these guys over here. I mean, West Virginia, they're almost taking over West Virginia. They're by Maryland and Jersey. They're getting pretty strong. So look at this. I mean, this is really exciting to see these guys get bigger and bigger. But my gosh, their dividend history and their revenue is not bad, which we'll jump to. They took a nosedive 2014, 2015, 2016. They took a nosedive in 2014, and then they started to increase slowly 2016, 2017, 2018, 2019, 2020 took a nosedive. That's kind of understandable. Gross profit is starting to go up. The revenue is slowly increasing. So, and these guys are in demand. I have no choice. I have to deal with these guys. I can't find alternatives. My apartment complex says we're dealing with First Energy, whether you like it or not. And I'm going to show you their dividend history, which make these guys very attractive. So here's the nosedive, 55 cents. Look, 36 cents, 38, 39. It just started to increase its dividend. 39 cents. Dividend yields 3.94%. PE ratio 19.6. I own this one. I'm long in it. As a company, they got some issues, but guess what? They're increasing their dividend. They have a 3.94% dividend yield, and they're a juggernaut. They pretty much run the state of Pennsylvania. They pretty much run this. They're starting to run the state of Ohio. They're just going to get bigger and expand. Again, none of this on this video is financial advice. It's for entertainment purposes, and there's a disclaimer in the description. But how can you say no to these guys? This is why I bought them. They're just increasing their revenue over time. Very attractive. So let's jump to the next dividend stock. Now this is like a unicorn stock. I mean, it's like it's beating the S&P in the past 5 years. It's increasing its dividend, and it's a mortgage-backed real estate investment trust. Mortgage-backed REITs don't do very well against the S&P, and they don't normally increase their dividends. They're kind of iffy, but this one is unique, and it's less than $20. It's sitting at $18.29, a dividend yield of 7.65%. The PE ratio is 7.94. I own this one, and I'm long in it. I bought the dip, and I'm just reinvesting those dividends, and they consistently increase their dividends. And even what's crazier, because mortgage-backed real estate investment trust revenue-wise, they're kind of wishy-washy. This one isn't, and I'm going to show you how much these guys generate in revenue. So this is in millions of US dollars. We're at 141, 142, 213, 346, 484, 535, 603. Increasing revenue. What about their dividend? 15, 16, 18, 19, 27, 30, 31, 35 cents. They just increased their dividend, a 7.65 yield. PE ratio 7.09. How do you say no to these guys? Let's jump to the next dividend stock. And that next stock is Omega Healthcare Investors. They're sitting at $33.82 with a 7.92% dividend yield. PE ratio of 38.81. Market cap 8.08 billion US dollars. The year range is 2808 to 3931. It's not jumping up like crazy against the S&P, which makes this also an attractive real estate investment trust. Now, it's a medical real estate investment trust. I'll show you their portfolio and how they're doing. So these guys are a triple net equity real estate investment trust that supports the goals of skilled nursing facility and assisted facility operators, financing, and capital. We're partners with 65 of the most future-focused, growth-oriented operators in the U.S. and U.K., accelerating their growth strategies, the $1.45 billion unsecured credit facility, and proven access to the largest public equity and debt markets in the world. Let's check out their portfolio. 949 facilities, 42 states, so they are huge, and they're also in the United Kingdom. So again, these are in 42 states. They have 65 operators, so long-term facilities, long-term acute care. People are getting older. People are retiring. The baby boomers are retiring. Where are they going to go? You know, these type of things that we need to look into. So this is what makes these guys very interesting, and I'm going to show you their dividend history. 48, 49, 50. A little bit of a nosedive here, but look at 66, 67 cents. PE ratio 36.76. Dividend yield 7.92%. Beautiful. A lot of facilities. They're in demand, and I'm going to show you this bonus stock. Bonus stock is Keurig Dr. Pepper. It's sitting at $35.24. Now the dividend yield's not the best. It's 2.13%. I like 3 to 5%, so it's not bad, but it's starting to make a comeback a little bit, and I'm going to show you its dividend history real quick. $35.24, 2.13% dividend yield. Keep an eye on these guys. Their revenue is pretty strong, so KDP, keep an eye on that one. I always add a bonus stock at the end, especially with really good dividend stocks, so keep an eye on these guys as a company. Dr. Pepper does very good with sales, and of course Keurig, people like coffee. So just remember that. Keep an eye on these guys. So if you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Make sure you smash that like button. I will post a video tomorrow. It's good to be back and post videos. It's been a little crazy. I enjoyed some sun. I'm going to get ready for my big exam that I have next week. So I'm going to be studying my butt off, but I will be posting videos. Keep an eye on my Twitter. Keep an eye on my Instagram. So make sure you add me on Instagram and Twitter. I go on Twitter Spaces, and we have group chats and stuff. It's very exciting. And I'm also on some Discord channels, so make sure you check those out, and you get to chat with me if we go on one day. So I'm just letting you know, I'm on other places. I know when I do live videos on here, I don't have a chance to talk to you guys, but going on Twitter Spaces, going on Discord channels, and going on other places, I have the opportunity to chat with you guys. So, Conduit was very nice in allowing a dividend investing discussion on his Discord channel. I always have it in the comment section, so check that out. Maybe we can arrange a time to all discuss dividend stocks, or you guys can just hang in there and chat with as a group and discuss dividend stocks anytime. So you guys take care and have a good one.